So welcome to week 6. Um, so first thing, in terms of the video for comment, that thing is just not working, and I just went ahead and deleted it as assignment. So since nobody's been able to access it, it's a YouTube issue. Um, the clip it keeps coming up as a copyright strike or whatever, and it's just they keep locking it down. It's a YouTube problem. It's a good video though. What it shows is credit card skimming, and so it's pretty useful because it can I can try to explain it, but it's not nearly as good as the video. The video shows these cash machines. They call them cash points or whatever in the UK. It's a British thing, and I guess it's a BBC or whoever's claiming the copyright on it. But anyway, what they do is it's fairly prevalent, and it happens here in the States, where they do two things. One, they go to an ATM and they'll put a little false front on it, a card reader. That's perfect. I mean, it's they make them for all the different models, and in fact, I had the ad from kind of the dark web of a company selling those things, and as quickly as a new brand of ATM comes out, these guys come up with a new front, and it's just a little thing that kind of sticks on the front, and it looks, it's the same color, it's perfect, and anyway, you don't notice this, so you shove your card into the ATM, and it um, passes through, their card reader, and then to the actual card reader for the ATM, and then there's a pinhole camera associated with it, and it's focused on the keypad, and sure enough, you type in your pin, and boom, and it's all cellular on their end, where as soon as you scan your card, uh, that magnetic strip info is sent to them, as is the pinhole camera with you. So now they've got your the strip, they've got the um, uh, but they got everything they need, and they can just drain your account, and you don't know it's been compromised. So it's are they going to keep using that scam? Maybe for a while until they come up with some sort of counter to it. But that one's pretty tough to counter. I actually saw one of these machines in when I was living in Spain. There was a machine. It was an ATM, and my Spanish is not so good, but anyway, it said basically no funciona. Out of order basically. So you shove your card in there, and it just comes up with out of order, and it does that over and over again. And anyway, you just think nothing of it, and you go to find an ATM that works. Well, that thing is just a completely bogus ATM. It's put there by crooks, and it's just a card skimmer, and they get your info. So that's what I was trying to show. That's why I worked a little harder to try and get that video to come up, but clearly YouTube and their whatever um, not cooperating, not one bit. So tonight we're going to talk about personal loans, and at the end we're going to talk about the term project. People always have concerns about the term project. People don't like the term project, but I think it's pretty useful. But it's kind of harder, I don't know. Some people seem to, you know, wrap their arms around it pretty easily, but other people just don't like, to have to start from scratch on a project. And it's not the sort of thing where I'm going to dictate the exact parameters of the project other than the length and things like that, 4 to 5 pages and stuff like that, just because that's kind of what it takes to come up with your plan. But it's supposed to be an individualized plan. So it's not a one size fits all assignment. And I give you quite a bit of freedom, but a lot of people don't like that. They don't like that kind of freedom. They want to be, just directly told what to do. But I think it's more useful the other way. Anyway, personal loans. So, yep, obtain purchase. So if you're trying to get a loan that's like tied to a vehicle, tied to a home, tied to whatever, it's usually much easier to get and at a much lower interest rate because they have the ability to repossess things if you fail to make payments. If you just want to go in there and get cash, they call that a signature loan. And that can be kind of a problem because the bank doesn't like doing that because, there's not, it's just backed up by your signature, by your word. And they prefer to have an asset, like a house where the foreclosure process is fairly well squarely, at least it was prior to COVID, or a car, where, there's a whole industry of repo men that's what they do. So anyway, if you go to a bank, it's typically going to be a little bit more expensive if it's just a signature loan. And so, yeah, family, friends, but for me, I don't do any of this. I typically will take a loan against myself, and you should probably as well. If you have started saving for your retirement and started to build up a 401k or an IRA, you can take loans against that. Typically, you can take them for half the balance up to a maximum of 50 grand. And then the interest rate's pretty low. It's like 3, 5%, something like that. But the interest is paid back to you. So not very many people do this, but I've often gone out and looked at different loans for different things, and always kind of come back to a loan off of my IRA or 401k. Now it is pulled out of your paycheck if you're still, contributing through your work, which is fair enough. But if you do quit that job, they may request all of that money. The finance company, or not the finance company, the you know people who have the mutual fund or the IRA or whatever we're talking about. Um, I've never seen that happen, but I've never quit mid loan, so don't know how that would work. But that is one of the downsides. Peer-to-peer lending. This was getting kind of popular. It's still out there just because the banks, like I say, are difficult, especially personal loans or new business loans. They know most new businesses are going to fail. I mean, the odds are stacked against you. I hate to say it, but Alaska is becoming like any other state. It's tough to get insurance. There's people out there waiting to sue you for whatever you're doing. And anyway, businesses, and sometimes they just, people just don't have good business concepts, or the market turns against them or something. So peer to peer, that P2P is, you know, some of these things where let's say you're on the other side of this, you want to invest and you're interested in investing in one of these companies. Um, what they would do is, let's say you give them 5,000 bucks. They don't turn around and give your 5,000 to one specific um, borrower. They split it up into little teeny, micro loans. So the understanding is that not all of those new businesses are going to fail. Some will actually make it, and you've got some diversity. So you're not just tied to one account. So anyway, I haven't seen Lending Club out there, but I've definitely seen Prosper, and I get their stuff, and Cabbage, and all these kind of non-traditional lenders out there. But the interest rates are never all that good for me. It was big in China there for a while, but it was full of fraud in China, so I think they got shut down as well. Um, anyway, small loans, 1 to 35,000. Yeah, credit report and FICO score. So your score that we talked about last week. Um, so, yep, paying it over time, sacrificing future earnings, and if you can't pay it back, yeah, it's I don't know. Most business ventures, I've got involved in some things that I thought were just going to work great and did not work, and then other things, I thought, this might work, and it's incredibly popular. So yeah, I don't like, taking in huge amounts of debt to get a business started. So anyway, let's see. Application process. So some of these things that we talked about before, the balance sheet, the cash flow statement, yeah, those may be useful. Now, again, if it's a online kind of thing, or, basically any company, they always want it in their own format. But if you've got that data already available, like an Excel spreadsheet, you can kind of cut and paste, and at least you have the stuff there. Loan contract. So, yep, it'll have the amount of the loan and the interest rate. And then there's always, certain federal documents that come along with it that sometimes are useful, sometimes they're not. But it goes through and further explains the terms of the loan. But like in real estate transactions, not necessarily personal loans, but it's, voluminous, and it's just kind of overwhelming. All kinds of guidelines that you have to agree to. Okay, repayment schedule. So amortization, we talked about amortizing before, kind of when we're looking at how to calculate, future value of a series of payments or something like that. Amortizing is this series of equal payments. Okay, that's what they call an amortization schedule. Part of the principal, part of the interest. So typically, like on a home mortgage, it's just crazy how it works. When your first couple years of the mortgage, you're paying primarily interest and very little on the principal. So, you borrow whatever 300 grand, and you're probably going to owe nearly 300 grand at the end of a couple years. There's only going to be a small portion of that principal, that 300,000. The rest of it's going to be interest. And then as you get towards the end of the loan, it's primarily all principal and very little interest. So as the interest on real estate, for example, is tax deductible, that's not necessarily a bad thing. But anyway, that's the American system. In France, they do it slightly different. Sometimes in Europe, you'll see a different setup. It won't apply to most of you. Maturity, the life of the loan. So, yep, yep, yep. So, yeah, this is kind of a scam when you go to a car lot. They'll say, well, I can't afford that car. And it goes, oh, what do you need your monthly payment to be? And next thing you know, you stretch the car payment out to, 7 years or something. Do you really want to be paying for, that big car payment at the end of, 7 years when the car's getting close to being worn out or at least starting to generate more in terms of maintenance? So, and again, in Spain, for example, real estate prices were going up, and they got around that by doing 60-year mortgages. I mean, that's just obscene. Your kids are born, and it's like, yeah, welcome to the family. Here's the mortgage. You're taking this over. So anyway, um, collateral. So collateral is what's going to be backed up on a personal loan. It's just unsecured. It's not backed by collateral. Collateral would be the vehicle, would be the home, would be the whatever they can repossess in case you flake out. And so a secured loan is going to be a better option for a cheaper rate. So, if let's say you need to buy, a new vehicle and you go in there and say, yeah, I want to take out a personal loan. Well, that's not going to be the best way to do it. You're better off to say, I want to take out the loan to buy, such and such vehicle with a VIN of this. So you kind of have to have it kind of figured out, and then you're liable to get a much better rate. Co-signing, co-signings don't do it basically. Just it's so what happens is if somebody with not so good credit um, doesn't qualify, right? So they come to you who's got good credit and they say, "Hey, I need your help getting this loan. Can you co-sign it for me? I'll take care of the loan. I just need you to sign off on it." Well, that's not a great strategy because one, the person doesn't qualify for the loan probably because they don't have the money to pay off the loan. And so, let's say this person, who asked you to co-sign, they flake out. Well, they just kind of walk away. I mean, their credit's probably already trashed, but the now you're involved in the process. And if you're a bill collector, if this thing's gotten sold off, the bill collector's not going to go after the original person, the person who needed a cosigner. They didn't have any money. They've got all the legal right to come after you. So it's much more cost effective, much more efficient in terms of time to go after the person who co-signed. And and it, if this was your loan, you probably wouldn't have let it get into collection. You probably would have, you know, answered those notes from the company telling you we're about to, you know, get ugly here. But no, you get late notification, and legally you are on the hook for it just as if it was your loan. So I would rather loan somebody money personally than sign on a loan with them. I mean, I'm not happy with either of those things, but the cosigner thing is frankly fraught with whatever. So loan application, yeah, we've done this before. Um, APR. So everything needs to be, apples to apples. You don't want some daily interest rate or some other interest rate. No, it needs to be the APR, annual percentage rate. So when you're comparing a 6% loan to a 6% loan, if they're both calculated in annual percentage rate, then you know where you're at. If they're calculated in some other rate, it's just non-standard. So anyway, standard rate provides comparisons and truth in lending. So all the way back to the 60s. Um, Anyway, they're just showing you different things. Again, we know about time value of money already. This is what they're showing with the interest and the principal. This is not as dramatic because it's only over 12 years, but here, look at this. They're paying 20 bucks in interest, and in the 12th year, they're only paying $1.76. They're paying 157 on the principal. Here, they're paying 175. So, just like I said, it's going to change um, as things go. Car loans. So, this is probably one of the ways where people just, you know, if you're the type of person that needs to have a new car every couple of years, it's definitely going to have an impact on your ability to save and your financial future. You may always have a new car, but you're not going to have a lot of other stuff unless you've got, pretty good income rolling in. Anyway, adding credit card debt to your current debt load. Yep. And buy what you can pay in cash. Limited debt, short-term solution. Anyway, the best way to do it is buy the car you need, not the car you want. And then also, um, you know, if you can buy one, because there's a massive depreciation hit that occurs in the first year or two. If you can buy one just slightly used, and I don't know about getting a rental car because, me like everybody else, treat rental cars pretty bad. But anyway, no gas too cheap, no curb too high, you know. But anyway, a car that's fairly fairly new, but not not driving it off the lot. You'll probably be happier in the long run financially. Let's see, next one, selecting the car. So again, there's lots of things that get into this. Yeah, but Edmunds and some of these things where they're trying to calculate retail resale value, they are a little difficult to figure out because especially in Alaska, Alaska's a non-disclosure state. So when you go to the DMV, you don't have to tell how much you paid for it. In other states, you do because they tax you on it. And so, those third-party companies can get that data, and so their resale value numbers can be fairly accurate. Although people tend to lie about the resale value, so they don't have to pay as much tax. But anyway, repair expenses, financing rate, yep, insurance if it's certain cars have quite a bit more in insurance. But the resale value is kind of a big thing. You know, trucks in general tend to keep their value better. The more you get in the luxury kind of thing, like an Escalade is probably the exception. I was looking at different vehicles, and there was a Jaguar XK, whatever, XKR, supercharged, whatever thing, but fairly high in the luxury. And man, that thing, I think the guy before me paid like 80,000, and this thing was being sold for about 12. You know, only a couple years old. So some of those high-end luxury cars drop like a rock. But the more strict performance, like I had a Viper and that thing, and Corvettes always sold them for more than I paid for them. So anyway, but that's probably not a primary driver for most people. Here they're talking Kelly Blue Book. Again, the utility of Kelly's or Edmunds or those other things in Alaska is kind of questionable. That being said, too, you could go, buying cars down in the lower 48 and even shipping them up. Some of the companies don't like to do this. Subaru especially, they won't necessarily deal with you because they protect their dealers up here or whatever. So whatever. I wouldn't buy a Subaru. I don't think they really have the customers. Um, when they do things like that, they're more focused on within the company, but that's up to you. Um, anyway, yep. Uniqueness Alaska market. People tend to overpay for things quite a bit. Pardon me. Okay, so here she's buying. You're looking at different cars, and she's comparing different things, the resale value. So maybe a Toyota, something like that, might have a higher resale value as opposed to some of the other marks. Uh, Repair expenses. There are things you can look at, some consumer type things that will generally quantify repair expenses. Some of the Beamers, some of the Minis, which are made by BMW, they could be a little pricey. I had one and I sold it pretty quick just based upon um, some of the repair expenses I was going to be looking at. And then insurance, a lot of it depends on the type of vehicle. You know, anything that's kind of flashy is going to be, sporty wise, might be a bit higher. But anyway, you can get those numbers and you can look at the charts. Again, I had a Viper, and Viper was the top. It was the worst because, basically idiots drive them, and they drive them really aggressively, and the thing had nothing in terms of no anti-lock brakes, no traction control, no nothing. It was all you, and so people tended to wreck those things. Anyway, I had to go with just liability insurance only, and if I wrecked it, it was all on me. And you know, sometimes it makes sense to do that. In this case, it was kind of a no-brainer. If I would have actually paid the insurance that they were asking, I could have bought the car again within 2 years, just based upon the insurance payments. So I was a little careful with that car, but that's kind of how you got to be sometimes. Negotiating the price by phone, no, not so much. Probably online. Trade-in tactics. What they do there is, they'll give you a huge amount for your trade-in, and then they won't come off at all on the sticker price, or they'll come off. They just manipulate it quite a bit. There's a lot of companies too that will say, "Oh, we're selling below invoice." What that means is they can do that. They can sell below what they paid for it. What they don't tell you is, I think it was the case of Nissan, where for every vehicle they sell, they get a $5,000 bonus from um, Nissan. So, in essence, they're paying um, whatever $5,000 less than they say they are, and so that's where they're making their money. There's all kinds of devious stuff out there. But anyway, you have, yeah, much more information online. But if it's a popular car, certain times, scarcity is a thing that they'll work on. They'll say, yep, and that may actually be the case now with all the supply chain things. Things are non-standard right now, and they're only going to get worse. Financing decisions, yeah. So yeah, if you want to stretch it out to 7 years, you can get a lower payment, but may be worthless by the time you pay it off. Uh, Sometimes people will also think leasing, that's typically not a good idea. Leasing is basically a long-term rental. You know, they'll inspect the car when you go to turn it in, and there'll be other things going on in terms of you have excess mileage, you have this, you have, money due when you turn it in, and if you do the math, it's probably not the best deal. But some people have just such a phobia about selling a car, you know. It's, it's not that difficult, but some people just don't want to do it. So they'd rather either trade it in or do a lease or whatever. Um, but anyway, it can be expensive. So here's what she's looking at, and you can see how the rates obviously go down. She's out to 5 years. So leasing's a popular alternative, popular in terms of marketing. I don't know that it'd be that popular. Sometimes businesses do it, but lower down payment, just return the car. Um, but there's variables, and they're not. You see this a lot with Mercedes and BMW again, where they'll offer these great deals, but if you dig down into the overall cost of ownership, it's typically a little bit more expensive. No equity. Yep, it's not your car. Still responsible for maintenance and damages or the lack thereof. And they may end up, you know, coming back to you. Student loans, go easy with that to the max extent possible. Um, there's a lot of politicians who promise that they're going to get rid of these, but there's a lot of resentment just right below the surface. Anytime they, um, you know, and it's not so much from the people who didn't have loans. It's from the people who suffered and fought and paid off their student loans, and they see the other people being able to kind of walk away from them. That envy's a horrible thing, and they are college educated. They probably vote. They probably donate to politicians, and it's probably not going to happen in terms of student loan forgiveness. Typically, till you're out of school, maybe tax deductible. And sometimes, going in the military or teaching at some remote school. Sometimes there's different government, mainly government type jobs that have some sort of um, loan forgiveness option, which can actually boost the salary of that thing. Whatever that specific trade is, if you're willing to do it. Um, Home equity loans. This can be a source of cash. Let's say you pay, 300 grand for a home, but now it's appraising for, 330. Well, you've got 30,000 in equity, or maybe you paid it down a little bit, and you've got your loan is not as big as the home value, so that difference is equity. So market value of the home minus the debt owed. Um, Limit based on equity invested, and usually up to 80% of the home equity in a home. Anyway, um, this interest can be tax deductible too if it's used for home projects. So, are they going to come? Say you took out 60 grand and you didn't do a whole lot to the house, but you did go get a new boat. Yeah, typically that's you know you you've broken a few laws there, but are you going to get in big trouble about that? Anyway, um, you should do something with that house in case somebody comes asking what exactly you use that loan for. Impact of the economy on the credit limit. Yep, as things get tighter, market values of home may decline substantially. I would not say in Alaska that's going to happen like that. The values of homes tend to be much more stable in Alaska. Certain markets, Arizona, Florida, places like that, tend to have values that fluctuate quite a bit. Um, in Alaska, it doesn't, it's not as risky um, as some of those things. So you're not going to see typically values jumping around. They could, but it's not the trend. Uh, Big dive back in the 80s, but that's been a long time ago. So, interest rate, yep, typically variable, so that would be based upon market rates at the time, usually tied to an index. So usually they have well, they will have some sort of cap um, in terms of the speed that they can adjust, but not a cap in terms of the maximum rate they can go to. They can't go quite high, but if it's a loan, and that starts to happen, you do have the option of paying it off. So, and that bit about tax deductible is because it's, used for real estate. Personal loans, boat loans, things like that are not tax deductible. So that's what I'm saying. Some people do that. Um, Now, it is legitimate. Let's say you're going to spend a bunch of money on the house and, you've got another pot of money that you're going to spend on or not enough money for the boat. Well, anyway, you can free up other money within your account that you by getting that home equity loan to use on home projects, and the money that you held in cash um, can now be used on something else. But anyway, you're just going to have to show some sort of receipts if you want to make sure you stay in the good graces with the IRS. Payday loans, yeah, things have gone wrong. you probably failed this course. You've got yourself in a situation where you're doing these short-term loans. Now, again, sometimes there's extenuating things for medical situations, but if you're a regular user of payday loans, you are paying a fortune in finance charges and the rest of it. So, yeah, even credit cards are, a better option than that, and credit card rates can get pretty damn high. So that's about that for personal loans. Again, the key takeaway is, secured loans, things that are tied to collateral are typically better. Don't do co-signing and watch out for predatory things like payday loans or, title loans or whatever they call them. It's kind of like a pawn shop thing. I mean, those places are in business, but, the reason in business is because a lot of other folks are paying exorbitant rates. Um, Here's a home. This is, how, in terms of real estate, it's a little bit more straightforward. If you're serious about buying a home, what you need to do is you need to go out and, pick a mortgage lender of your choice. They're going to sell the loan off anyway. So you pick a local one, Homestate or residential or somebody like that. You go in, you get pre-qualified, and they'll look at your finances and they'll be able to tell you, um, what you're going to be able to afford. So, that's how you initiate the home buying process. You don't go out and look at homes and hope you got the money for it. Number one, you're not going to be with a good agent. A good agent, the top tier guys don't have time for people who aren't really serious about it and don't know what they can afford. And if you aren't pre-qualified, you kind of demonstrate that, you know. Anyway, it's going to cost you about $50. You'll have to get a credit check, and but it's insightful. You go in there, fill out the application, and you get a much better picture of where you sit. Um, some of these numbers where they're talking about 28% or 40%, you can't say things like that not knowing where the person is located. If you're in, San Francisco and New York and you want to buy a piece of property, good luck getting it, where it's not 28% of your gross monthly income. Those people, in order to get in, they typically have to pay more than that. Whereas if you're, some place in Kentucky or something, hopefully, it wouldn't be that same amount. That is if your, pay isn't abnormally low by taking a job in Kentucky or something. But um, anyway, it's gonna vary regionally because housing prices vary regionally. Affordable down payment. So, well, for those who have VA benefits available or other things available, a lower down payment is what you want. Affordable monthly payments. Yeah, cash flow statements allow for continued savings. So there are sometimes people get into these situations. They spent so much on the home that they can't do anything else. And buying a home, although it's smart financially, um, there's things that you're going to do that you wouldn't do at a rental home. A lot of improvements and stuff because it's yours. You can do it. Your quality of life may be better, but you know, things like fences and gardening projects and things like that you wouldn't have in a rental home. That stuff can add up in a hurry. So allow for that so that you can not only live in your home but you can actually live well in your home. Don't go for the maximum you can afford. All depends. I like real estate, and I do like the fact that it's, in terms of investments, my strategy, and I think it's worked out pretty well, is making money in the stock market here and there, and then, and I'm in on aggressive stuff, and I don't want to be in that kind of risk for that long. The market's just not always that favorable, so try and get out at the top and put it into real estate because real estate is, solid and it doesn't fluctuate as much and it, doesn't go out of business. It has tax advantages and you get to enjoy it. Having a big bank account is not that exciting. Having a big home it's got some perks. Anyway, but anyway, they're trying to tell you, I would. Um, I would apply all this to car buying, certainly, but homes, I mean, that's where I'm spending my time. That's where my family's spending their time. That's the quality of life. But anyway, and it is an appreciating asset as opposed to most other things that are depreciated. So I'm not saying to be, cash poor and just barely scraping by, but I I tend to go in on real estate. Um, and job stability does matter, certainly. Purchasing home, probably. Yep. But it's pretty regulated. It's pretty, it's not like throwing it all in one stock or something like that. I mean, the fluctuations are not. Um, Decide of the price range and identify the foam you want. Right. What you should really be thinking here too is not so much from a financial perspective. You ought to be thinking about what am I going to be able to rent this home for? Because for most of us, what you want to do is you want to perhaps buy a starter home, you know, start, well, enjoy that home, but you're really buying that home as a future rental. And then you do that again, and then you move on up and you do it again. And your old homes, which you've got a good rate on, the mortgage rate for you as an owner occupier is the best. If you buy income property, it's going to be 2 to 3 times the price in terms of the interest rate that's going to be paid because it's an investment. Consider a condominium. I don't. I'm not a fan. Problem with condominiums, especially here in Alaska, is that most of the condominium associations have certain covenants that say that only a certain number of the condos within the complex can be rentals. And I don't like, my hands to be tied. So let's say, you're in a must move situation, you're relocating, you want to sell the condo, but it's not working out. There's no buyer, so we'll just rent it instead. The condo association can say, nope, we've got the maximum number of rentals and you can't rent. So now you'd have to sell maybe for a lower price. Plus, I just don't like that, that much of a congested thing. So anyway, do what you want to do. You're buying something with the consideration that you're going to have to sell it at some point in the future. So even though you love condominiums, if you don't think the majority of the market does, then I wouldn't do it. If you think is a good strong market out there, then do it. So anyway, that's personal preference, but I've never lived in a condo. Relying on a real estate agent. So yeah, you know, again, there's some good agents out there. There's a few who do just about all the business, and there's a whole bunch of other folks who don't do much at all. But real estate agents, it's kind of a no-brainer. I do have a real estate license, although I've let it lapse. But the seller pays the commission. So you as a buyer, I mean, why would you not use a real estate agent? You're not paying the commission. And especially in Alaska, sometimes there's some property being sold that maybe in an avalanche zone, maybe a little sketchy with something. Um, you could do the for sale by owner route, but typically what happens there, what I saw when I was, in that business was that somebody'd ask you to sell their home for them, and you'd say, well, what do you want for it? And they'd want some ridiculously high price, and you'd say, nope, you can't get that. You'd say, well, screw you, I'm going to just sell it on my own. And so oftentimes they're overpriced. So be careful with that. Criteria used to select a home, so price, convenient. So, like school system. Well, we don't have kids, so I don't care about school system. Yeah, you kind of do because you got to resell this thing at a certain point. Homeowners associations. I'm not a fan, but some people are. It might prevent somebody from painting their house, bright pink next door, but then sometimes they can get kind of oppressive. So check out the homeowners association to see what you think there. All right, moving on from condominium. So real estate agent, yeah. Some of them are good, some of them are not. When I was an agent, I was actually more frustrated with the clients. They're, embarking on this huge financial decision and they're talking about the drapes or colors like that. It's like you can change all that. You can't change the neighborhood. You can't change the fact that it's in the shade 9 months out of the year. So anyway, each to his own. I've always been more of an outside person in terms of, I want to concentrate more on where the lot. I mean, if you saw my house now, it's an old homestead. The home was a beater, but the land is beautiful. But anyway, so yeah, maybe you can go too far the other direction. But anyway, online real estate services. I've invested in Zillow and Redfin and some of these other things, and they're probably going to come along at a certain point, but they're not quite there yet. I wouldn't say that they're necessarily riskier. They're just not that popular. And things like Zillow are, eh, borderline worthless in terms of trying to get information because, again, Alaska's a non-disclosure state, so they don't have access to, uh, public records that have meaningful information in them like they do in the lower 48. So not as good of you know, process or service as it would be in other places. So it'll come along. The commissions that agents get, it could be argued they're maybe excessive, but I tell you what, if you're an agent, you start out about 4 grand in debt every month, and you're scraping trying to get those commissions. So sometimes it seems like they're getting a lot of money, but if you look at the deal, there's very few that are really making big money. Um, anyway, criteria for selecting a home. So price, certainly, but you got to know what you're pre-approved for. Convenient location, maintenance, school system, insurance. Um, yeah, you can't change too much with the insurance. Sometimes the nature of the roof or, proximity to a fire station, they'll ask you all those sorts of questions. Taxes, you know, again, there's trade-offs. If you want to live in the valley, lower property taxes. If you want to live in town, higher taxes, but maybe less of a commute. Depends what you want. Um, Homeowners associations, some people are fans, some people are not. Um, Resale value, consider the real estate commission. This is pretty obvious in Alaska, especially in military kind of areas where, people move in and they move out 3 years later when their assignment's up, and, you know, suddenly they want to increase the value of the home by 6%, regardless of what's happened in the market, because they want to recover that commission. They didn't pay a commission when they were buying it, but now they're going to have to pay that salesperson 6% on the way out. And so that kind of leads to an inflationary environment, uh, particularly in real estate areas or military areas where people are moving, on a fairly frequent basis. Personal preferences. So don't go overboard. Some of the worst homes I've ever seen are custom designed homes, and people have the right intentions, but man, stuff does not turn out the same way on in real life as it does on paper. I walked into a home one time, and the people, I guess, were trying to maximize the size of the bedrooms, but the hallways were like 2 foot wide, unusable. I've had homes in Europe and stuff, and it's not that unusual in Europe, but you're having to hoist furniture up over the balcony and pull it in through the window because the stairways and everything else don't permit that. So that's more on the custom home side. But in terms of personal preferences, um, uniqueness is not always a selling point. Sometimes there's some cool homes out there, but for the most part, um, those kind of over designed tract homes. I mean, I wouldn't want to live in a tract home, but generally they're laid out fairly decently because they make so many of them that they put a little bit of time and effort and then they just copy them over and over again. So anyway, you might hit upon that one buyer who's looking for exactly what you have, but I would be careful with going too far in that direction. Market analysis. So this gets a little tough. I really do not like this top line here, price per square foot. A good friend of mine, a great real estate person, he's the one who got me in the business and he's still in it. And I was asking him how much my home was worth, and he said, "Oh, whatever, 185, 185 bucks a square foot." I'm like, "Well, what about the neighborhood?" "Yeah, no, 185." What about, I'm on a quarter acre or a 2 acre or a 5 acre lot. Yeah, no, I mean, there's so much more to it, especially if you're somebody like me who, it values the, you know, the rest of the real estate and the outbuildings and all that other stuff. So, anyway, yeah, they can give you numbers, but they're going to give you those simple numbers, which may or may not be accurate. And then location, a corner home um, is, maybe more valuable. Something on the edges generally, on the edge like waterfront, on the edge of some state park land, on the edge of now on the edge of a road. If it's a highway, that's not a good thing. But being on the edge rather than being buried in the middle of a subdivision is typically a little bit better. Sometimes being on the end of a cul-de-sac where the lots widen out, there's a lot more to it in terms of some houses. In terms of the house you want to buy in a neighborhood, in terms of purely, you know, financial economic return, you don't want necessarily the worst house in the neighborhood, but you don't necessarily want to be that one beautiful house amongst a bunch of, crummy homes that are going to drive down the value. Um, I've got a good friend who, when I bought my first home up in Eagle River, um, I guarantee you I got a great price on it because this guy has got every Alaskan toy and proud display out there in the yard. I mean, it's just, and it's been like that for forever. I've kind of grown used to it, but I know people who drive by and look at it. It's just, oh my God. I mean, the garage is completely stuffed with other junk, and so there's trailers and stuff, and it's all just disorganized. Anyway, um, you know, multiple wives have gone through that place when the time I was there, but not the stuff in the yard. That never changed. So good dude though. Yeah, he'll probably track down who I am through this, and I won't say anymore. Valuation of a home. So again, if they're doing it purely by square foot, I'm just telling you, for me, and especially in Alaska, I think there's a lot more to it because there's so many variables in terms of location. Economic impact on home values. So usually I just kind of gloss over these, but this is going to be kind of a big deal. Right now, we're seeing one of my best friends. He's down in Florida, and he says real estate is finally starting to slow down. That this whole goofiness of paying more than list price is kind of gone, and that the people the buyers having to put up all these extra fees and that's kind of tapering out. The stock market is pretty much in the toilet this week, and there's no really room feeling of optimism right now. We've had a pretty long run in the stock market, and most people are thinking it might be tapering off, and so just kind of a general malaise that's people aren't. I think real estate now. That being said, interest rates are also starting to go up now too. So there's going to be fewer people in the market. Fewer people will qualify. So prices, I wouldn't say they're going to go down, but they're not going to be skyrocketing as they have been for a while. So this is what they're talking: demand, supply and demand changes. More people in the market, more demand, prices go up. And if they don't have the money, if they've got access to easy credit, up it goes. So, um, impact to mortgage defaults, impact on home prices. Yeah, all these things, they're all temporary. We creep right back into the same situation. Back in the day, yeah, they had the whole ninja thing and speculation. Actually, prior to 2008, people did have the feeling that real estate can only go up, and they're all just, they're risk-free investments because real estate's always going to remain positive. And yeah, so some people got shook up, and so lessons from the crisis. Mortgage application, it just got more difficult. I don't know that it's necessarily better, but I saw some people. There were again this friend of mine down in Florida. These people bought two doctors. They bought a condo. They bought the entire top suite thing for 1.2 million bucks, and they couldn't keep up. And so it went for 200,000 in an auction, and then they tried to declare bankruptcy. And thankfully, the court said, "Yeah, no, you're both doctors. You're not going to stiff the lender with this bill. You speculated, you lost, so you know you've got a whatever $1 million bill to pay off and nothing to show for it. So it could be, but if you didn't think the Florida condo market was speculative, you weren't getting good advice. Anyway, zoning laws. Yep. Again, I've kind of zoning laws and HOAs, they're kind of related. Um, and the fact like zoning laws in Anchorage are a joke. I mean, they have them, but at least Eagle River, they don't enforce them. I've got a wetland right behind me that they built a road right smack through the middle of, and then they sold the land. You wonder why Eagle River got, so torn up in the earthquake. They build on substandard land. They always have. So anyway, zoning's, it's like one of those things. It's a lot of work only if you do it. And zoning laws, they can be onerous, but there's kind of selective enforcement. So that's why some people live in the valley and some people don't live in the MOA anymore. Anyway, obtaining a second opinion. Uh-huh. Yeah, it's tough to say. I mean, the market ultimately speaks. Your fellow buyers ultimately speak. If some, you know, person out there, it's like being in an auction here in Alaska. Some piece of equipment that's not worth it will all of a sudden go for way more than it should have, and you can't say that, oh no, it wasn't worth that because, well, it just sold for that. So uh, appraisals are very difficult because the appraisers have access to, they know what you're paying for it, and so it should be based upon just the complement or comparable sales, other homes in the market. But it's just the one takeaway from this is when you're buying a piece of property and it's appraised and the real estate agent goes, oh man, this is a great deal. It appraised for exactly the value. Oh, that's no surprise at all. That's pretty much the way it happens, unless it's something drastic. I I can't remember seeing a deal where it did not appraise for what was paid for it. It's not that great. Negotiating. Okay, so one key to negotiating is being pre-approved. If I get two offers, if I'm selling a home and the agent brings me two offers and one guy is pre-qualified and offers me full price, and the other offer, um, did I say is pre-approved? Let's say this guy's not approved. He offers me full price, and the other person is pre-approved and offers me 5,000 less. I'm taking the 5,000 less without because I'm not taking this house off of the market for somebody who doesn't even know if they can buy it. I mean, your real estate transactions take a lot of time to get done. And if you take your house off the market and then this guy goes to seek his financing and doesn't get it, you just wasted a lot of time and a lot of money. So anyway, um, but negotiating, it's a fine line. Um, some people enjoy it. I think it's kind of interesting, but you have to be careful. You don't want to insult the person, but you probably don't want to pay full price, typically. So anyway, and the big deal is yeah, all they can do is reject it. It's not like it's the end of the world. I mean, I actually, when I was buying this particular piece of property, my first couple offers got rejected, but you know, I was trying to find the bottom, and I got a little bit off, but I didn't come in too low and have them just get all pissy with me, but I wasn't necessarily going to pay them exactly what they wanted. And then there's other things you can do as well. And this particular piece of property, because it was a big one, I had them split it up. Or yeah, it needed to be split up prior to purchase. I paid for all the surveying, which was almost $10,000. But by doing that, I bought three parcels, and I mean it was super complex transaction. It's in this case, for example, the VA will not finance more than 10 acres. They won't finance a big piece of property. So I went with 9 point something acres for one portion of it. And then I had some stock market money that I wanted to use that was in an IRA. So the back 40 acres was held in trust through an IRA. And then the middle part I paid cash for. I mean, you can do some creative stuff. And these people wanted to sell it and they were going to get the amount of money they wanted. It's just, they needed to do a few extra things. And it really wasn't, I needed to do a few extra things. They needed to do a few things on paper. The legwork was on my part. Anyway, um, yep, the contract will have all that in it, a closing date, the rest of it. Down payment uh, can be 10%, can be 20, can be 0. Um, there's usually always going to be some sort of earnest money, a certain amount in cash, but it depends on what the banks are doing that particular day. And, you go through a different agency. Now, there's certain times where, a bank may have you pay PMI. And I did this one time. I was buying a house in Las Vegas, long time ago, but the market down there was screaming. And so, yeah, we didn't have 20%, so put down 10 or something and had to pay private mortgage insurance. It's about 120 bucks a month extra. But because the house was appraising or going up in value so quickly, about 3 months into it, I had it appraised and it had gone up in value. And then I could claim I had equity and cancel the PMI, that private mortgage insurance. So depends, every situation's different. Closing cost, yeah, there's a lot of things in here. Typically they're around 10,000 bucks. Points, I never do points. Points is a notion where if you want to get an interest rate lower, say the prevailing rate's like 3.25, and you want your interest rate to be 3%, then you can pay to get it reduced to 3. It sounds kind of weird, but it's always mentioned, but very infrequently used. Origination fees, appraisal fees, no, they're not 200 anymore. They're 500, 600 at least. Title insurance, those are things you can't skip. Make sure that the house is clear. Also, like home inspections are super important, especially now. But I don't want just somebody to come out and check the outlets. I want, especially like I say, Eagle River or some of these other areas, anywhere in Alaska with the earthquakes, you kind of need a structural analysis. And so, some guy who's just going to come out and, measure the gaps in the windows and make sure the plugs are all grounded. I want a little bit more than that, so I generally pay for it. But I think it's money well spent. Fixed rate mortgage, that's what people typically do. That means the rate will stay, your payment will stay consistent for, say it's a 30-year mortgage, it will stay the same throughout, as opposed to rent. If you're renting a home, it's going to continue to go up. That's the beauty of a mortgage. Preferred when interest rates expected to rise. Yep, very, very infrequently are they assumable. I've got a dog that needs to be slapped. Wait. Okay, amortization table, we talked about that. Series of equal payments. So again, you're not going to dive into a table. You're generally going to look at something online and it's going to be just fine. But it's crazy. I remember when I was growing up, my parents had a mortgage. It was $133 a month. I mean, and that was even seemed like a small amount back then. But when they first bought it, 30 years prior, 133, you could have rented a house for that. By the time they got to the end of 30 years, you couldn't rent a garage for that. So anyway, these tables, they still exist, but you don't do it very often. And this whole notion of the principal and interest. Remember I said very little paid on the principal initially and substantially more paid on the interest. And then as it gets down to the end of the loan, here's 534 on the principal and $3 on the interest. That's pretty normal. The amount that's deductible on your taxes is the interest. So some people will say, "Oh, I want to, get a new home because they like deducting that interest." Um, anyway, impact of the mortgage. Go figure. Larger is larger. The larger the interest rate, yeah, they don't give you credit for much here. Um, but anyway, those interest rates as they go up can really change. And here's another dramatization of the principal and interest. And in case you needed it, one more. So the longer the maturity, I think I mentioned this before. I typically take a 30-year mortgage, and if I want to pay it off in 15, then just double up and pay it off in 15. You can't necessarily go the other way. So now keep in mind too, the beauty of the calculators online is they'll normally have um, this mortgage payment plus interest. I mean, not plus interest, plus insurance and taxes. So, let's say your mortgage is oh, $1,800. By the time you add on, the mortgage insurance, not the mortgage insurance, the homeowner's insurance, and the taxes, that's probably another $600 a month, depending on where you live. But it adds up, and that's what your payment's going to be. Typically, those things they can be one of two ways. You can either pay them outright, directly, but the mortgage companies usually want them held in escrow because it's kind of their asset, kind of their home until you pay it off, and so they want to make sure that you're not flaking out and not paying the taxes and not putting their home at risk. They kind of want to make sure insurance is on the home since it's their home till you pay it off. So, yep, websites, bankrate.com. They're not bad. Pardon me. Fixed rate mortgage. Yep, yep, yep. So you can see the payment just screams up. I mean, same amount goes from 477 to 734 because of that interest rate change. So that's why you refinance. Typically when it's a percent lower or so. And yeah, I refinanced twice in the past couple of years. And now that interest rates are starting to go up, it's gonna, it will pay off. And I'm not in a hurry to pay the mortgages off because now the interest rate is so low in terms of, competitive uses for that money, opportunity cost. Rather than, you know, put a bunch of money to pay it off, I'm better off keeping it in the market. That's up until the market started going sideways, but all things are temporary. So 15-year and a 30-year. Arms are not as popular. They kind of they're more of a desperation thing when interest rates start to go up and they go up abnormally and it's definitely a gut check. I had one in Europe and it was very low rate and but it could have skyrocketed away from me and I would have made the home unaffordable. But you know it actually all worked out. Things stayed good, and I sold the home about 3 years later and benefited from having an interest rate that was, a percent or two lower than the prevailing. What they typically do is, well, not typically, they're indexed to something. And in my case, it was the LIBOR, the London Interbank, whatever rate, because it was Europe. Here in the States, it'd be, indexed to the Fed rate, and there'd be some parameters where it could increase by 1% per year. So it can't, double over a year, but give it a couple, 3 years, and yeah, you could be in trouble. Caps, that's what they're talking about. And anyway, more variables. If interest rates are low, go ahead and lock them in and do the fixed rate. But if interest rates seem high and they seem like they might go lower, then rather than lock in that high rate, an arm might actually work for you. As interest rates go lower, so would your rate. So home versus rent, there's a lot to go into this. Part of it has to do with do you expect to be staying around? But uh, in my strategy, and I think what works for a lot of people is you know, make it into a rental property because you can get such a low interest rate as an owner occupier. Um, so Anyway, it is more expensive in terms of a lot of areas, maintenance and just sort of things you'll do to the home. But in the long run, owning, um, you know, has incredible benefits. The real estate lobby is pretty well connected, and the tax treatment you get is substantially more favorable, and the fact that your payment stays uniform. So for a lot of us too, just if you've got pets, if you've got other things like that, um, or if you just want to be have a little bit more distance, it's kind of rare to find rentals with large chunks of property. So anyway, depends what your preferences are, but financially, in long-term situations, I've always found that because literally that's where most people make money. I mean, all you have to do is look at situations like, say, some of the um, reservations in the lower 48. It's always a fairly desperate situation with people in financial straits. And one of the main reasons that that happens, or whatever contributing reason, is the fact that home ownership has just not been an option, that things are provided. And it seems like you're helping people out, but in the long run, that's transfer of wealth from one generation to another doesn't occur in that situation. That transfer is typically done through real estate, so it's tough to get ahead. Graduated payment mortgage. This was a lot of times where they do this with these balloon payments and other things, where people would, buy a home because they're going to flip it and they don't make any payments on it. It's all fun and games till the market fell apart. So you don't see these very often anymore. These were kind of anticipating that real estate could only go one direction, and that was up. And now that people have a broader view of that you don't see these types of mortgages. I mean, just to get a 30-year fixed with good credit, the paperwork and all the other stuff is just onerous. I can't imagine what you'd have to do to qualify for some non-standard loan. Interest only, same sort of thing, where people are trying to get in and they don't have quite enough money, and so they're trying to pay it on interest only. Yeah, good luck with that. Those products are very scarce anymore. So refinancing. The beauty of refinancing is a lot of times it just kind of pushes your mortgage out. I've refinanced a couple, three times. So I had a 30-year mortgage, and now it's probably still back out to 30 again. But the truth is, I don't even know if I'm going to be here 30 years from now. So what do I care? The other thing is too that they always, every time you refinance, there's some costs involved, but you usually skip a payment or two in there. So it usually comes down. And then when your payment does come back, I had a payment that was, I think it was 2,800, and it's down below 2,000 now from refinancing. And another one that was, I don't know, 1,800, and it's down to like 1,100. So it can really make a difference. But anyway, talk to your um, mortgage broker, and that's why it's kind of nice to maybe have a relationship with one of the local folks who can tell you whether or not it's a good deal. The banks are generally leaning forward in the straps because they've got a whole bunch of extra little costs they're going to be able to pass on to you. And a good friend, somebody who's got a fiduciary interest, your interest at heart, will generally say, yeah, no, it hasn't dropped enough. Don't do it. So that's that. Now I want to talk about the term project. So first off, everybody gets all spun up about the term project, like I say, because it's people, they want freedom, but they don't want freedom. They want to be told what to do, and it just doesn't work that way in this for this project because everybody's situation's different. Some of y'all are traditional college students. Some of you are have worked for a while and are going back to school. Some of you are already, well established in life. So what's going to work for you? There's no one, size fits all. So If you are like, say, a typical college student, your whatever part-time job you got, if you're primarily a student, it's not meaningful to do this elaborate budget when we're talking, income levels that are not really going to allow you to invest and do other things. So, just push yourself out 5 years or so to when you're actually in your career and you're making money and you know you're starting to save and do everything like you think you should. So that 4 to 5 page typewritten thing, that's that's standardized. Um, some people will try and do it in a page and a half or something. It's just has gaps. You need to, you know, this list of things here is not a checklist, but you should kind of review it and make sure you've kind of covered things. Um, you know, whether you plan to have children or might have children, you just come up with the most likely scenario or potential scenario. Who knows what's going to happen? But, you know, a lot of people will have children, so that's in there. Comfortable retirement. The thing about retirement savings is like I say, I use my retirement savings all the time, um, well before retirement. I, the big chunk of this property was retirement. I've got property up by Chickilin, like 65 acres that's in a retirement account. And again, for me, once in a while I'll make some money in the stock market, and it's fairly speculative, semi-risky investment, and I want to stabilize things. So if I get ahead like that, I'll dump it into real estate, and it's fine. I mean, it's real estate's a great investment, and certainly you know very stable, and for most cases. Student loans. If you had student loans, this is also kind of helpful just to kind of, perhaps if you haven't already taken out a whole bunch of student loans, realize that if you do, they will impact upon kind of the rest of your life. If you are still struggling to pay off student loans, and instead of buying a house and being able to pay off the rest of your bills, it could have an impact. That whole ability of, from the charts from the first day, where if you put aside money early on, it can grow into a tremendous amount of money. If you, by the same token, if you delay, um, saving, or still have student loans, you know, into mid-career, that's going to have a definite impact. So look at Social Security. You know, people will think, oh, I've got Social Security out there. I'm good. Well, see how much money is available. You can look up on your Social Security, and you can also, they're pretty upfront. They'll tell you. And if you think that that's going to be quality of life, how you want to spend your latter years, I mean, you need something. And the other thing about Social Security is it's it's so insolvent. It's Social Security, there's not like some savings account set up for you with your name on it. Now, Social Security is kind of a Ponzi scheme. The people paying into Social Security right now are paying for the people who are retired right now. And as demographics change, right now the baby boomers are out there, and there's not as many people in the workforce. So the thing's going broke. Plus, Social Security pays for all sorts of other things, some of the disability things, and there's there's a couple. Well, there's one legal firm in particular that what they do is the states pay them like 1,500 per person for people that they can get from um, state disability and get them converted to Social Security disability. So it's money ahead for the state. The state pays these lawyers 1,500 bucks, and they work to convert people and switch these people's disability and get them on the Social Security system. So I mean, there's a lot of things that are, anyway. That fund is in serious trouble. So um, just keep that in mind. If Social Security is part of your main part of your retirement plan, it may not be pleasant. Life insurance, we'll talk more about this as we go, but I don't have life insurance anymore. I don't need it. Because the events that I would need life insurance for are past, Um, the kids either do or do not go to college, the spouse, that I would be caring for or whatever that they're, it's anyway, if you try to get life insurance later in life, it's going to be quite expensive. But the good news is you don't need it later in life. When you do need the insurance, you're young, it's super cheap. And so what I'm talking about there is primarily term insurance. But we'll spend some time on life insurance. But look at that pretty hard. I don't mix life insurance and investments. Life insurance for me is not an investment. Sometimes, there's companies out there that blend that, but they don't really get the yields that most people do. Most pure investment companies do. Anyway, investment portfolio. Um, I think I probably scared most people off talking about stocks and other things, but if you're going to have 401ks or IRAs and the rest of that, you're going to be in the market. Just about everybody, by virtue of whoever you work for, you're going to be in the stock market. So if you learn a little bit about it, that's to your benefit, and then you can decide to invest in it independently as well. But anyway, um, you may be, maybe you're going to be an electrician or a fireman or something like that, where there's a funded pension plan. More power to you. More and more, that's just not the case. And even if you are working for one of those, entities, a lot of times they'll offer you maybe an increased salary, but without the retirement, and it's tempting. It's a competitive world out there. If you offer, if they offer one person 80,000 with full benefits and 100,000 with no benefits, generally people gravitate to the no benefits and 100,000. And so that just incentivizes the companies to go, well, screw that. We're not offering any benefits. We're going to offer 100 grand and we're going to be competitive. So there's definitely been a trend away from retirement plans. Military career, that's a whole different thing, but it's probably just a limited group out there. But you do have to kind of have a career plan for post retirement, unless you want to just retire. There's a few who do that. Career field, what's going to be your situation in terms of 401ks for most of us, 403bs. I guess I got a typo in there. Thrift savings plan, that's for military people. But anyway, those tax deferred investments. Um, anyway, so the whole point is to come up with a plan and sort of tailor it. If you're still like overwhelmed and not sure, what to do, well, do something and send it to me. And if you send it to me a couple 3 weeks before it's before the end of the term, I can get it back to you and say, well, right now you're going to get a B with this. If you add these few things, you'll get an A. So, if you do indeed want to get an A on the paper, it would behoove you to take me up on that offer, or just wait till the end. But if you wait till the end and you hand in a page and a half, yeah, you're not going to be getting the A that you wanted. Um, but that's about it. We'll talk more about this as we go. But it's you know I'm not that hard of grader if you come up with a plan that's tailored to your situation, and then you put in the effort, and you know take advantage of what's out there by kind of demonstrating your knowledge. Like I alluded to beforehand, the 529 plans. If you say one of my goals is to save for my kid's school, and you just put it in a regular fund, well, you just kind of screwed your kid. Let's say you amass 100,000 for your child, that kid's only going to get about whatever 70,000, because the taxes have to be paid on that investment. Whereas if you just simply way back when designated as a 529 plan, and that's an educational savings type plan, and there's other plans out there. You can look online and see them all if you just go to one of the planning areas for any of the mutual fund sites. But anyway, if you designated it, put it under a 529, boom, your kid would get the whole 100,000 bucks. So, and if little Johnny flakes out and doesn't want to go to school and doesn't do that, then the worst case is you pay a little bit of a penalty and you still get the money. I mean, it's not like it's gone. It's just you didn't live up to, or your kid in this case didn't live up to that part of the contract, but it's really not that much worse than if you just put it in a regular account. So anyway, all sorts of things you can do, and it's pretty important. All right, that's it for this week.